Well, markets hate genuine uncertainty, and that's what we have now. And I think, first of all, sentiment is a big factor here. And we had a lot of crowded positions, I think, in markets. And you get these periods where if you get a shock in the news cycle, like you've had with the new variant, what tends to happen is everyone runs to the same side of the boat at once. And when that does happen, you get severe reactions, often overreactions. I think it takes time to settle down. This is true uncertainty, and markets just struggle with that. And that's, I think, what you're seeing today.
I mean, it seems obvious that the catalyst for this recent bout of volatility was the emergence of the Omicron variant and what this may mean for the outlook. But there was already a bit of an overhang creeping in as investors got used to the idea that central banks would be beginning to tighten policy. So to what extent is this uncertainty actually linked to the Omicron variant versus all these other sort of macro factors just having an excuse or a catalyst to come to fruition?
Yeah, I think that's a very good point, because the timing of Powell's backing away from the transition language that's been so prevalent, I think certainly could have been worse in many respects, kind of happening right at the same time as the new variant emerged. I actually do think that the key drivers of markets I think over the next year will tend to be the coronavirus prognosis, central banks and liquidity, and then inflation. And so to get two of those three things kind of arising right at the same time, I think was unusual. I do think the central banks beginning to be a little bit more hawkish is probably of equal importance, perhaps even a little bit more importance longer term. So I think they're both coming together to really create this period of volatility that we have.
What does the inflation path look like in your view? Now looking out to 2022, how are you thinking about it when it comes to your outlook for next year?
Well, I think the debate continues to be whether inflation is transitory. And for me, the part that is transitory are the 4%, 5% numbers. But what is not transitory, I think, is this notion that inflation remains above the 2% targets that many central banks have. And so inflation, I think, is probably likely to peak in the first quarter of next year. But that doesn't mean it's coming back down to a level that's going to look like low inflation. And so for me, I think there are some permanent features here. The supply chain bottlenecks that I think have caused some of these inflationary pressures could be worsened a little bit by the Omicron variant. And so I don't think it's going away anytime soon. But for me, this is where central banks are probably playing it from the right side here. I think markets were probably going to be more fearful of a sharp adjustment from central banks more than anything else. And so to pull that forward a little bit, to be a little bit more hawkish, to me, is probably the right thing for central banks to be doing. They clearly see that, I think by the end of next year, you're likely to be at full employment. You're likely to have closed the output gap, at least in the US. And as that happens, I think it's really difficult for them to remain as dovish, I think, as they have been. So the timing was certainly unusual with the new variant hitting us. But again, they have to do this. I think to maintain credibility, they have to do this. And for me, the more gradual trajectory is critical. I think that's a better outcome for markets than something that looks like the Fed or other central banks are falling behind the curve.